Good morning, everybody. It's Christian from Serene Education with the Four Major Notes update for the 17th of October 2012. Hi, guys. Hope you had a fantastic trading day yesterday. As you can see very nicely on Euro US dollar on the daily, we had a beautiful day yesterday of upside movement after this indecision candle. So, as it stands now, this is looking very favorable for further highs, at least up towards these prior highs up here at the 13169 mark, 1700 mark at least. But as we get close to that, obviously we can see price stalling. However, we've got above this prior swing low, and you can see quite clearly here about the intermediate trend that's been taken out. And as well, we've also broken through that magic 1300 mark, that psychological round number, which has happened to be a major support and resistance level recently, preferably through the whole of February, March, April, May of this year. So fantastic, looking good to the upside. I can take away this long-term support here, the institutional support here at 1285. That's actually found support on both occasions. Now we've seen price really rallying to the upside. A lot of momentum. Histogram looking fantastic. The intermediate trend is looking good to the upside. The long-term downtrend is still there, and you can see that price is now tackling it as we speak. So happy days. Let's see if this momentum is genuine. Get above all this, and then we should be targeting further highs for the foreseeable future. Looking at the 4-hour chart, you can see the institutional moving average is still below price. Just take away that one. You can see quite clearly there's a massive support chart, and we're heading higher. Now, the ultimate goal, you can see the RSI is above 50. And we're heading into that 70 mark, which is constitutes to overbought. And you can see, however, that our prior resistance level here, which constitutes to that lower swing, has now been broken or breached. And you can see that the last 8 hours in particular has been upside favorable. We had the last 4 hours been very indecisive. The pullback on the prior candle. So we'd like to see this is probably potentially profit taking after this initial move to the upside. We would like price now to continue to the upside. And as things stand at the moment now, we should be looking at ideally that 1700 as our first target, as we've been there currently in the past. Onto sterling. Let's have a look and see what's happened on the daily. Yesterday, nice bullish engulfing candle above the 23.6 February tracement area that we saw from the June low to the current high in September. And now it's looking good. You can see the histogram is still telling us we should be looking for buying sentiment, even if we've gone through this consolidation period here after the tackling of the 16,300 mark at the top side. So in today's charts, we should start looking for that bullish sentiment to follow through. So let's look at our hourly here. You can quite clearly see that we're above the institution moving average now. Beforehand, we were below it. And you can quite clearly see that we're now looking at potentially a chance to see price actually tackling a prior support and resistance high here. You can see the intermediate trend is looking negative on intraday. As you can quite clearly see that we've gone from a very bullish scenario to one of very indecisiveness. You can see a lot of red and blue here as the histogram cannot make up its mind where the sentiment is lying at the moment now. But you can see we're back above the institution again, and you can see near term on the 4-hour, you can see we're starting to see higher swings, which depicts upside movement. And as long as we're trading above the institution, RSI is above 50, we should start looking for price to move to the upside. First target would be roughly around the 16,200 mark, which happened to be our prior support and resistance level high here. Get above that, then we should be tackling 1625 and all the way up towards that 16,300 mark. Onto the US dollar Swiss franc. Let's have a look at this pair. Nice bearish engulfing candle yesterday after the prior day's indecisive candle. This is very much an exhaustion candle, this doji here. However, we still want to see that confirmation from the market, because price was still trading above our price support and resistance level here in the shape of the 9300. And sure enough, we got there yesterday with a nice bearish engulfing candle. And I mentioned yesterday on our video that we want to see a clear indication of that, and this has taken us straight through that 92500 mark. So histogram, everything looking good for further downside moving. Institution moving average above price, as well as our two smaller time frame ones. But you can quite clearly see now we've broken through this consolidated range over here. So ultimately now for the foreseeable future, we should see if price can target to the downside. As it stands now, if you look at the prior low way back here in August of last year to the current high at 1000, which is our major support and resistance level high, you can see quite clearly that the 23.6 February tracement area here at 930 has just been broken. And now we should look for long-term support and resistance levels to the downside as our first target. Notice the histogram on our side is very much negative, and you can see we are very much in a negative trend as we span. So 38.2 would be our next target, which takes us roughly around the 8850 mark, just below the 8900. So for the foreseeable future, we should be looking for sentiment to fall to the downside. We could see possible consolidation with a pullback in mind after yesterday's bearish engulfing candle. And you can see that the last 4 hours in particular, you can see definitely there's been a slowdown in this negative breakout that we saw yesterday, as we see price action hugging the top end of the 50% range of that candle. Notice that RSI is also heading into that 30 oversold situation, so we could see consolidation. As long as that consolidation now takes place at the underside of 930 and we see price building on that sentiment to the downside, we should be looking for entries to the downside for the foreseeable future. Onto the last pair of the day, the US dollar Japanese yen. Let's have a look at this pair. A lot of upside favorism after we saw a noticeable bullish engulfing candle here at 78, and the last couple of days we've seen price heading back up towards that area around here at the 7900 mark, which happens to be a fib retracement area. Taking the low here that we saw in February to the high we had in the highest parts of this year around the March area, just around the 8400 mark, and you can quite clearly see the 61.8 and the 78.6 mark over here have been in play just recently, as we've seen price consolidating between these 2.79 and 78, as well as trading below the institution moving average. Near term, we're starting to see a bit of positiveness. However, we'd like to see price trading above the institution to constitute to long-term positive. As long as it remains below the institution, we should still be looking at potential negative sentiment, as it is a negative signal if price is trading below an institution moving average. However, you can quite clearly see that our lowest swings just recently in the past day or so has been breached. But to be on the safe side, we'd like to see price trading above the 79 here, ideally to see price heading up towards that magic 800 or 80 mark, which happens to be a major support and resistance level on our weekly time frame. So as it stands at the moment now, we are seeing positiveness on the US dollar against the Japanese yen. However, we'd like to get above this range over here. You can see prior resistance. So there's get above the 79 over here would definitely constitute that we should see price moving higher for the foreseeable future towards that 80 mark. So intraday, let's have a look and see that on our 4-hour time frames. Histogram is very much blue. We are seeing higher swings. The institution moving average, etc., is all below price, helping her to the upside. And most importantly, our 50% line, 50% is well, we are well above the 50% line as we speak at the moment now. But you can, as you can quite clearly see, just near term, prior high here, quite clearly, you can see the price has been trading slightly higher, and you can see the RSI is very much indeed lower. So we are seeing potentially a slowdown here. You can quite clearly see on our 4-hour here, we had a number of hanging men, indecision candles, the top end over here, and the last 8 hours or so we've seen bearish pullback. So we want to get back up above this area here to see price moving to the upside. Near-term support and resistance levels are in play as we speak. So we want to see a nice kickoff here to the upside. If failure to do so and we see bearish engulfing, we should be targeting back towards these areas here, roughly around the 78.35 intraday and back towards the 78 for the foreseeable future. So as it stands at the moment now, we want to see a support bounce. We've got to get back above these 79. As I mentioned, ideally trading above 7900 would be better for long-term targets. Because we know definitely that the sentiment is still looking long for the foreseeable future. However, near term, you can see that there's a consolidative range, and we do see consolidation. If we see another bearish engulfing candle to the downside, then we should be targeting these lows here at 78 back towards the 78.35, then back towards the 78 as our foreseeable targets for this remainder of this week. That's it for today, guys. I hope you have a fantastic trading day. Please be aware of any news announcements today. Quite quiet, but we have one or two things. Unemployment rates, MPC meeting minutes for the British public, and then we have building permits and housing starts and crude oil inventories. Crude oil inventories later this afternoon at 3 p.m. GMT for the US market. So other than that, please be aware if you are trading the CTC to back it up with some money management rules. And just to keep it as simple as possible, guys, make sure that your support and resistance levels long term have been plotted intraday to give you an idea of where price is likely to go to as target levels. So very, very important. Keep it as simple as possible and you shall not go wrong. Okay, so I'll leave you with this for today, and I'll see you first thing tomorrow morning. Until then, trade serenely.